Joining us now, John Hilsenrath, Wall Street Journal global economics editor. John, China now pushing back this morning, saying renewed pressure will not work. How do you see it?
Well, we've already put $50 billion of tariffs on the Chinese, and there's another $200 billion coming. There was a comment period last week on that. That's running out. And, you know, I would expect the president to go ahead with that other $200 billion unless he sees some movement from the Chinese with some new offers to bring down our trade deficit with them. So I think that is the next step. You know, I think what's going on right now is a refocus in the White House. You know, they spent a lot of time in the last 6 months focusing on steel tariffs and U.S., Mexico, Canada tensions in Europe. I think there's a desire to focus more on China and U.S. trade issues with China because they feel like that's more of a bad actor than, say, the Europeans or the Canadians.
Right. Theft of intellectual property, as we've talked about, the forced surrender of technology, which is essentially a policy of the communist government there. It's run out of Beijing, essentially. Well, go ahead.
And a lot of state support for favored industries, state subsidies, bank subsidies and such. So that, you know, there's a feeling that they've been tilting the playing field, you know, against a lot of American industries for a long time.
Any sense of whether we do get this trade deal done with Canada? We were talking about it with you earlier in the week, that there are very few hurdles to overcome. There's the issue of dairy quotas and tariffs on Canada's side. Canada wants to keep in place these panels, these tribunals to settle dumping and tariff disputes among the countries. How do you think that we get a deal done today? I think that we do need to highlight that this is negotiating that's working, whether you like the nitty-gritty of these deals, that we are coming back together with our most important allies.
Yeah. Well, you know, all the signals that we're getting this week from the Canadians and from the White House is that they're moving pretty quickly towards some kind of agreement. If not today, then, you know, maybe at some point over the weekend. So, yeah, I mean, it does look like there's going to be an agreement. One thing to point out is, you know, this was a handshake deal that was done with the Mexicans early in the week. A lot of people that we're talking to here in Washington are just puzzled about the details. You know, there's an agreement, for instance, about how much content has to go into American imported cars, how much labor content goes into that, and how they work that out hasn't been really sorted out. So, you know, I think we could get a handshake deal, but there's going to be a lot of people waiting to see how the details get filled in over the next few weeks.
Hey, John, good morning. It's Mike Block. How you doing? So,
great.
You know, one thing that I'm thinking about here is this. We had growth of 4.2% last quarter. We just got that yesterday. There's a lot of excitement about the Mexico deal, about the potential for a Canada deal. China, maybe not so much. Now, from the Fed, and just to quote Jay Powell, we've heard something along the lines of, if this carries on much longer, these trade difficulties, this trade uncertainty, it may start having effect upon economic data. Based on your conversations with folks in the Fed, is there more of an underlying worry there than maybe they're letting on yet?
Well, there is certainly a worry at the Fed about, you know, what all this trade tension is going to do, not only to economic growth, but also to inflation. But I think there's also some sense of resignation that there's not really a lot that the Fed can do about it. You know, a lot of economic research shows that when you impose tariffs on imported goods, it pushes up prices, but it's a one-time effect. It doesn't really change the rate of inflation over the long run, so the Fed can't really do that. You know, it kind of throws sand in the gears of the economy, so it could slow economic growth. But again, the Fed really can't control that. The Fed is trying in the long run to just get the economy going without causing a lot of inflation, and they can't control the effects that trade happens. So they're watching warily. But the bottom line is, I don't know that it changes Fed policy all that much.
President Trump, John, also told Bloomberg that he would consider pulling out of the World Trade Organization if they don't, quote, shape up. This would take an act of Congress to really do this, and this has been talked about. I think that I saw stories from the beginning of the president's term last year where he was throwing out this idea. How much of a worry is that truly?
Well, so that's absolutely right, Dagan. They've been talking about this for a long time, and it would be a new front in the White House's trade offensive. I think right now the main focus is on turning the attention back to China. And, interestingly, one of the questions people have is whether the U.S. should be challenging China inside the WTO, whether we should be threatening to kick China out of the WTO for violating a lot of conventions within that organization, and what their obligations are under that organization. Well, so, it's an interesting question. Do we pull our football away and leave ourselves, or do we try to challenge the Chinese within the confines of that organization? We know that this administration is pretty suspicious of international institutions, and that kind of embodies their suspicion.
Yeah, but we win almost 86% of all the cases that we've brought to the WTO. It's 85.7% since 1995. So in the last 23 years or so, and that's actually above the global average. Global average is less than 85%. But again, I want to bring it back to the overall economy rather than getting too close to the data points that come out each and every day and the headlines. John, the economy looks incredibly good right now, does it not? I've said this earlier, but in terms of overall growth, in terms of wage growth, in terms of consumer optimism, in terms of the job market, actually, even though July was weaker than expected, we have faster monthly average job growth this year than we even did last year in the first 7 months of the year. Tell me, can you see anything that looks bad? Looks bad. I mean, the one thing that I harp on is the fact that we're moving towards running trillion-dollar budget deficits in good economic times. So let me emphasize, these are good economic times. We had a 4.2% growth rate in the second quarter. If you look at growth over the course of the year, it's closer to 3%, which is still an acceleration from what we had earlier in this expansion. That's good news. The unemployment rate is down under 4%. A lot of people who want work can find it right now. That's all really good news. The one worry, the one thing that I would emphasize is that during good economic times, you should be running your budget deficits lower. You should be stockpiling resources, and that's not what we're doing right now. In the late 90s, we had... But President Trump says he's going to eliminate pay raises for civilian federal employees next year.
Right.
That was what I brought up with Richard as soon as he sat down, because I want to know what you make of that before we go.
Well, in order to do that, you have to declare an emergency. So it's a little ironic that during this economic boom that the president was just touting last night in this rally, he's saying there's an emergency on the budget situation. And that brings me back to the point I was making before. You could say there's an emergency on the budget front. During the late 1990s, we had an economic boom and we were running surpluses, and now we're looking at trillion-dollar deficits. What are we going to do the next time we're in a recession and we don't have the resources to fight it? That's the kind of thing that I worry about.